All right, guys, and retail sales, sorry for that. Just in time, just in the nick of time. Oh, the memes today. Thanks, Chandler, for jumping in. Dollar dropping here initially, guys. Let's take a look at what the numbers were in terms of retail sales. I am operating off my hotspots, so I hope that the stream quality is okay. I'm not sure what happened with the internet. We just had numbers dropping. CPI, of course, for Canada coming out at 0.7%. This is hotter than expected inflation there, month over month. Year over year, slightly higher than expected there. 4.2 median CPI, trimmed 4.2. And the big one, guys, retail sales number for the U.S., slower than expected here. Core retail sales down 0.4%, showing some actual down movement here in terms of retail activity, retail positioning of not retail positioning, of course, but retail sales volume. Retail sales month over month also down, and the dollar seeing a little bit of a rally here. Let's take a look at what the S&P. I would imagine that this, of course, would put some pressure for those of you who are watching indexes. It would make sense, right? You would see a little bit of down off of perhaps consumer demand cooling for goods and services. What we can see here is that gold also taking a little bit of a spike in both directions. Gold trading just above 2,000 right now, 2,004. You guys know him and love him. It is the co-host of the show, Mr. Ivan FX. Ivan, yesterday I talked about my Euro idea. It moved on without me. Yesterday, we discussed some of the indices. We talked about the NASDAQ. We talked dollar. And what are you looking at today? What's the latest from yourself?
Do you have any questions about any of our products or services? Right now, members of the A1 Trading team are standing by, waiting to assist you. You can head over to our website, a1trading.com, and click the icon in the bottom right-hand corner to chat with one of our team members live. You can also go to a1trading.com/contact and fill out the Contact Us form, and someone will get back to you shortly. We have our helpful and friendly members of our support staff ready to chat with you anytime Monday through Friday from 9 a.m. to 5 p.m. Eastern Time. So what are you waiting for? If you have any questions, feel free to chat with us live right now on the A1 Trading website.
I would actually highlight, share screen is probably a better thing to do. Highlight euro yen, as yen pairs starts to come back into season. You mentioned CAD, you mentioned USD yen earlier. We saw that CPI out of Canada came out better than expected year over year, so it's currently flying higher, but I guess it can travel a bit more, so pull back to support will probably be great tomorrow or today, depending on when that happens.
Yeah, I was going to say that Canadian dollar CPI coming out a lot hotter than expected. What does that do for the I don't really track the Bank of Canada too closely, to be honest with you. Does it do anything to their situation off the top of your head, or do you not really pay too close attention either?
No, also most people have priced in a pause. We have set on a pause, data dependent, or they have paused data dependent, and this really puts sticks in their wheels, if that makes sense in English, because it was previously 4.3, now it's 4.1. It was supposed to be 3.9, so we are seeing a slower deceleration of CPI than expected, so it can lead to more hawkish comments from Bank of Canada, right?
Fair. Yeah, no, and I think I've heard that as well, that they were sort of on the pausing from here statements, which in some ways was a little bit ahead of other central banks like the Federal Reserve, of course, where we've sort of said, well, we're not going to say we're going to pause, whereas the Bank of Canada has sort of made it more apparent. So it'll be interesting to see if that tone, if there's a backpedaling at all in that tone. So we talked. Yeah. What about the NZD CAD? I know you were watching that one yesterday. Any updates there?
Of course. I haven't really got my price yet. So I'm literally just waiting for it to come back higher, but sure it didn't. So right now is a break and retest. If it can just break lower, I'll probably short it tomorrow morning, or tomorrow when it does that. That is the latest update.
Yeah, I'm the same way. Like if I have sometimes people will say, will you still look to short it, even though that would be a worse price than where you initially wanted to short it? Well, the answer is if the conditions are there and the pullback sets up again, I'm still happy to sell it. It's momentum trading 101. Like if something is trading up and you want to be a buyer and it trades up without you, but then it pulls back, momentum says, hey, it should keep going. And if it doesn't, the trade is nullified. Doesn't matter if I get in down here or here. It's, so an interesting perspective.
Yeah, just to show 2 milliseconds how I'm thinking right now. I feel like we are here. So one option is to go back up to previous resistance previously, or a break and then retest short there, and then if it does it again, short again, and then that's kind of how I analyze in the market of where we are. So this has happened before and it's going to happen again. So yeah.
Yep, makes sense. And what's your take on all this dollar? The dollar was a little bit weird to me this morning. The initial pop off of cooler than expected retail sales numbers. Again, for those of you guys who missed the announcement, we had core retail and retail sales headline coming out at 0.4%. This is under market expectations. Of course, it is still a growth, but it is a slower than expected growth, right? We were, in terms of core retail sales, we were expecting 0.5% month over month. And then retail sales, the headline, 0.8% month over month. So we saw cooler than expected. And regardless, we saw a little bit of a dollar pop, now giving back some of those that gains. What are your takes on that, Ivan?
I'm not going to be flipping the story too much back and forth, but that should be lower interest rate. But what I'm imagining, like, what is the opposite? Then the opposite interpretation is that the retail sales are falling faster than anticipated, and that is one indicator that we might be falling harder than expected into recession. So that's the only reason why dollar would rise. I would even also argue that it should fall. Is this just a pullback to sell again? That's definitely a possible setup that you have to have in mind. So, but also it has backtracked most of the move higher. So yes, it's surprising, but as I say, the news is your friend. So if it goes higher, just look to sell it.
Yeah, no, and I kind of agree with that, but I see what you're saying. You're saying like, well, if there's recession fears surfacing, that could cause a bit of risk-off concern about global markets and perhaps the dollar. Other places will also feel that pain, and perhaps the dollar will be relatively. But in my opinion, and I think we're trying to play. We both agree on this, so we're trying to view it from the other perspective in terms of dollar bearishness. The question, though, is, will something like this and perhaps more economic slowing data, like we got on yesterday's number with the what was the name of it? It's the manufacturing thing. Or the Empire State Manufacturing Index yesterday. Both of this showing some economic slowing, could be perhaps a combination of these things, could be enough to get in front of the Fed and say, hey, you don't want to break the banks. The economy is slowing down, doing some of your work for you. I think that these are potentially dollar bearish contributors. So that's my take on it. I'm continuing. Nothing here sort of challenges, I don't think, where I am at with this, which is staying dollar bearish, looking for pullback sells, buying gold. We'll see how it plays out. But also in reference to this number, the S&P 500 took a little bit of a dip here this morning off of these numbers, which somewhat makes sense, right? Retail demand slowing can hurt businesses. So we saw the S&P 500 down here this morning, not by a tremendous amount, just a slight movement. Barely anything of note, but regardless, closing out or nullifying yesterday's bit of a rally that we saw during market trading. So,
but that's 100% understandable. The move on S&P is justifiable and understandable. So why are they deviating? Well, it only depends what foreigners will do with information of lower retail sales, and we could talk about it for a long time until we become blue, purple, and pink. But but at least S&P 500 is doing what we're expecting it to do. So, but coming back to what you kind of said, also we still have a trading plan. Doesn't change as much. It's one in the pool. So if this continues to happen across the board, then yes, we have to start getting worried. But I was asked to cover gold by Babita forever, and
Yeah, please.
what my update on gold are. It's very simple. Have we made a higher high? Can we continue buying? And the answer is, drum roll, I guess, no. We don't have a higher high. We even almost have wicks to the lower side. So for me, it's easy peasy lemon squeezy. There's nothing I can do. Wone says, can you explain the retail sales released? Is it good for dollar or bad? Retail sales is basically, as far as I understand it, is the amount of goods sold, and they measure that, or not amount, but what the value of what's being sold to retail. So it's a way of measuring inflation, because if you buy the same goods, give or take, month over month over month, and then you can track the difference in the value of your receipt, kind of a thing. If that makes sense. So over time, it measures inflation. So it is, in this case, bearish for dollar, because if retail sales is higher, that will lead higher interest rate and higher dollar.
Right. And you know, the Federal Reserve is paying attention closely to these economic figures, because the Fed is not trying to, well, they've said that a byproduct of raising rates could be that the economy takes a bit of a hit. They just don't want to destroy the economy. They just want the economy to cool and help them in their mission to cool inflation, right? So today's numbers, I would say, arguably, are in favor of their mandate of trying to see that the economy is slowing a little bit here. Again, retail sales numbers at 0.4%, and core retail sales month over month also 0.4%. So still growing, but at a slowing pace, which is, again, in my take, it is actually somewhat dollar bearish. And again, we're seeing the market not follow through on this gold sell-off that we saw. Sure, we saw in the lower time frames a bit of a spike here to the downside. Gold recovered some of those gains. And again, to Ivan's point, I think that if you're looking at a chart here, we've had a bit of a messy chart. And my idea here, as I've mentioned and explained several times, you know, it's a mix of a couple different things. It's technicals in the sense that I just like this 2000 psychological level. If that breaks, I'm out of the trade. But it's also those fundamental components that we've discussed, such as the debt ceiling concerns, banking situations, perhaps any banking collapses can cause gold to spike, as we saw here in early May. It is something that there's many catalysts that could potentially send gold flying high. So that's where I'm at. The dollar yen, kind of an interesting one. You mentioned pound yen. I'm also looking for setups here, watching for pullbacks. If we get any strength to come in to the pound, or on the yen, if we see any breakouts. This is also interesting to your point. We discussed this earlier. You know, if pullbacks occur, perhaps there's a buying opportunity. But also, I would say that, as you mentioned, if we get a breakout, it also could be of interest. Oops, sorry, my trading view messed up for a second. So if we get something like this, like a big pop above, like a big level, like 170.8, this level of resistance could become sort of that new floor as we continue to see that divergence in central bank monetary policy, which is something that Ivan and I, we've been doing this together for a while now. It's been an awesome journey. We've been doing lots of commentary. Central banks diverging are an interesting trade play that we've talked about many times on the stream. So give us the rundown, Ivan. Pound, Japanese yen. You've talked about this pair a lot. What's the interest here in terms of the two central banks? What's the divergence there?
Completely opposite, well, now pushed to be opposite. The Bank of England wanted to pause in the previous meeting, though they did raise interest rate, but they probably need to do it again because of the high interest rate, and the next inflation is coming out in around 24th or 26th of May, so you still have some time until that. But generally speaking, they have been forced by inflation to still keep doing it. On the other side of the peninsula is Japan, which is struggling to get inflation at least up to their target until they can stop being so dovish. So in case of like, how do you explain it? The Bank of England, or pound, is so strong, it's so up here, but again is so weak because of how their economy is. Like when the UK is really, really hot, really, really strong, but the Japan one is really, really weak in comparison. So they have to have two completely different monetary policies. And until we see a change, I've seen that for a long time, until we see a change in Japan, we have to be yen bearish, and it's almost by law.
Right.
And how do you know that? Because they're doing quantitative easing. They're doing they are trying to make the price of their bonds, their debt, at a specific level, and to be able to do that, you have to use and print money, and it's just going to be more and more and more devaluated.
Yeah, no, that's a great way of explaining it. And that divergence, as Ivan is talking about, is where, when it materializes into a chart, right, the pound is expected to potentially strengthen due to a hawkish Bank of England. Hawkish just meaning they're looking to raise rates and get their inflation under control, and the opposite problem for the Bank of Japan. So this is where, when we compare the two, we talk about being sort of slightly more bullish pound and bearish Japanese yen. So looking for key technical breakouts combines in a way that Ivan and I love technicals and fundamentals. We're looking for a story trade, as Ivan just highlighted for us, and a technical trade, looking for chart price action, breakouts, pullbacks, confluence factors. What we're doing as traders is everything that we can stack in our favor to add probability in your favor. That's ultimately what we are trying to do. And at the end of the day, it's still not guaranteed. We're still risking small, managing positions, trying to let winners run, and trying to stop out of losers as fast as we can. So this is how Ivan and I have been doing it we've been doing this stuff together for a while now, and this is what we do day in and day out. So is it repetitive? Yes, but I would agree. It's not boring. It's actually quite fascinating, especially if you enjoy markets and you enjoy studying what central banks are doing.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.